types of money in a modern economy. Before considering the different ways money circulates in an economy, we need to first divide the principal actors into three main groupings. There are central banks, such as the Bank of England, and commercial banks, and consumers. So having established these, we can consider the different types of money that occur in the economy. First of all, there are notes and coins, and these are IOUs from central banks to consumers and commercial banks, which are recorded physically. Second, we've got bank deposits. Now, these are IOUs from commercial banks to consumers usually, and they're recorded electronically. Then three, central bank reserves, and these are IOUs from the central banks to the commercial banks, which are also recorded electronically. So let's take a look at these in a little more detail. Notes and coins, or cash, represent nothing more than promises to pay the holder from the relevant central bank, and these are recorded as a liability of the central bank, an asset of consumers and commercial banks who hold it. So when the Bank of England was founded in 1694, the first banknotes were, however, directly convertible for gold. And while observing the gold standard, the Bank of England always had sufficient gold available to match the number of notes and coins in circulation, and the promise to pay the bearer of banknotes was backed up by the physical gold held in the Bank of England's vaults. Except for a few short periods, this is how the bank operated for the following 250 years. Since 1931, however, the Bank of England's money in circulation has been fiat money, paper money that is not convertible to gold or any other asset. Therefore, the holder of a modern banknote can no longer exchange their notes for gold at the Bank of England. All he can do is swap it for other similar notes and coins. We call this fiat money, and fiat money derives its value, therefore, not from direct convertibility, rather from being a trusted medium of exchange used by consumers, commercial banks, and governments, which is deemed to be reliably convertible for goods and services. Next, let's look at bank deposits. Now, bank deposits make up most of the money in a modern economy. For security and convenience, consumers prefer the ease of access and safety of storing larger amounts of money with commercial banks. And as a reward for doing so, commercial banks will offer an interest rate on this money. Another benefit in contrast to paper money. Bank deposits come in a range of different forms and are recorded in electronic ledgers. So one could say that most money really is just numbers on a screen. So when you deposit paper money at a bank, you're simply swapping an IOU from the central bank for an IOU from the commercial bank. In fact, when you deposit cash at a commercial bank, that commercial bank now has a new asset, the paper IOU from the central bank, and a new liability, which is your deposit. Bank deposits are now the most widely used store of value and medium of exchange. You've likely bought something recently using your credit card, for example. No paper money was exchanged. Rather, you transferred some of your bank deposit to a third party in exchange for a good or service. It is important to note that bank deposits are created by commercial banks, just like fiat money is created by central banks. And we will cover off the dynamics of this in more detail in a moment. So lastly, let us look at central bank reserves. And these are electronic rather than physical IOUs from central banks to commercial banks who, either through choice or as a result of regulation, place money with the central bank. These reserves are simply an electronic record of the amount owed by the central bank to each individual commercial bank and can be used to transfer value between commercial banks, but not from or to consumers. So while these are the typical ways money can be thought of, central bankers and economists like to think of it in a slightly different way of categorizing money. And this is to divide money into two categories. And these are base money and broad money. So what is broad money? Broad money is the amount of money that consumers have available for transactions and is made up of banknotes and coins. These are the IOUs from the central bank, and bank deposits, which are the IOUs from commercial banks. The second category, the base money, often referred to as central bank money. And this is made up of currency issued by central banks, again it's those banknotes and coins, as well as central bank reserves, which is money in the form of IOUs from central banks to the commercial banks.